Welcome back, gang. It's your boy Red. And today's video, I just wanted to kind of touch on my strategy. So I've been getting a lot of requests on some explanation of how I'm actually running the strategy during my videos. So I decided to go ahead and set up a meeting and literally give a step-by-step kind of tutorial on how to do that. So if you want to go ahead and pause the video, grab yourself a notepad and something to write with, and get ready to get some of this sauce. All right? See you on the other side. Okay, so um, basically, as I was just kind of explaining a little bit, is that with my strategy, it's pretty similar to a scalping strategy. These are based on ICT concepts, but I don't involve everything that he talks about, just a few key points. So I'm going to go back and go through each day of this past week and kind of mark out some moves so that you can see, what I'm looking for, the tools that I'm using to mark out, and where to take your TPs, all that good stuff, where your stop loss goes. So I'm going to go ahead and run this back to Monday. Getting back here to Monday, this past Monday, I trade futures. So normally you might see, like when I put post up, it'll say NQ up here instead of NAS 100, but that basically is the NASDAQ. All right, so Monday. So again, I trade futures, and with the futures market, I trade NASDAQ 100, and I'm consistently waiting till 9:30 open, right, New York time. So if we go to 9:30, right about here. Okay. So if you go here to 9:30, right? Market opens up right here. Normally, of course, you get your jumping around of the market. It's going whichever direction. But the first thing that I'm looking for is a clear breaker structure with displacement. So basically, you're looking for some nice, husky, healthy candles pushing in any one direction. This is without any kind of bias. I'm just looking for this actual price action, right? So once that's done, the first thing that I grab is my Fibonacci. And I'm going to also post my Fibonacci settings in the groups so you guys can, match those up. And I might even post it up here real quick just so if people are watching the recording, you can just pause the video and look. So basically, get your fib on here. You're running it from the high to the low of that one move, right? You're going to be looking for what I call like a confluence cluster. So you want to find a fair value gap. Make this a little bigger so you guys can see these. You want to look for that fair value gap and or an order block, right? So you got your fair value gap. Since this is a strong push in one direction, that last up candle is part of your order block. Obviously, I would normally mark it as huge as this was with the wick there, but for the sake of conversation, we'll just put it in there. Got your order block. Boom, right? What you want to do is look for after price has reached this low, and if it continues down, you're just going to continue dragging the bottom of your fib until it stops and turns around. Once it reaches into what I consider the hot zone, in between the yellow and with the orange, that's your trigger for your sell. The first line is considered an aggressive entry for me. The orange is considered kind of a prime or an average entry. And the top yellow line, that's like your premium entry. And the main reason for that is it's the shortest distance from where you're going to be having your stop loss, which is the high, right? So, boom, we have our entry. TP1 is always going to be at your low, not one tick below, not above it, right at the low. Same thing for this stop loss. I always put my stop exactly at the high, not a little tick above, not a few, right at it. Okay, so then we get back to it. You can see that you have TP1 hit, the next levels, TP2, there's TP3, and so on and so on. Okay, so from there, you were in and out with a win. All right, that was Monday. And I'm gonna show you the same things on each day. So if you're missing anything, I'm gonna be repeating it, but I want to show you how consistent this is. So here's Tuesday coming up. And let me reset this. Right in here. Okay. Bring it up like this. So 9:30, right in here. All right. You can see here, it's starting to break structure. As it dropped down, you didn't get a break of structure here. It rejected, right? It came up. It really didn't give you a clear break of structure up here. But then it came down. You've got a full set of candles closing below these lows. There's your break of structure, change of character, right? Same thing. Grab your fib, mark it from your high to your low. I'm going to drag this out so you can see the full set here, like that. Right? And then we were waiting for it to come back in our zone. We do have our fair value gap. Whoa. Okay, let's move that over. Let's try that again. We have our fair value gap from that low of that first candle to the high of the third candle. Okay. All right. Stretch it over. This is my fair value gap. And then this one, I mean, you have, good push down. I wouldn't really say that this is much of a strong order block just because it didn't like bang all the way down here. But for, for this example, you can still mark it out. Order block. Again, you ran it to the low. You're waiting for price to come up into your hot zone. These are your hot zone areas. You got a fair value gap in there, so there's your confluence. It taps in one time. If you had an early trigger for an aggressive position, you'll see that it came down. And don't let this spook you out. Once you put this position in, leave it, because it will do this. I've seen it time and time again where it'll come down and miss your TP, by freaking a few ticks, and it'll go all the way back up. You'll be like, oh my God, it's breaking structure to the upside. I'm screwed. You know what I mean? Let it go. If it wins, it wins. If it hits stop, you lose. Done, right? The point is to stay consistent and hold these trades, because the win rate is higher than the loss. And ultimately, if you keep doing that, obviously you will be profitable. So, same as last time, came into the hot zone, it danced around for a while. Like I said earlier, some of my trades, I'm in these suckers for like 5 to 15 minutes and I'm out. Sometimes I'm just, okay, we got 10 minutes left. Sometimes, I'm riding this thing, halfway through the day, right? But ultimately, you can see, came up into our zone, worked its way down. You hit TP1, TP2. You almost got TP3 down here, okay? On to the next day. I'm going to try to move as quickly as I can. Stretch this over. Here's 9:30. Again, 9:30 open. Price is jumping all around. Boom, you have a clear break of structure. And broke these lows. We're going back to our fib. High to low. Oops, stretch that over. High to low. All right, this one, you don't really have the fair value gap in here that we will be looking for, right? But what it did tap into was this order block. All right. Now, even though you have this little sucker here, you could consider that one your order block since it was followed by nothing but, the black. But nonetheless, you're going to mark that out. So I guess we can go with this one since it was followed there by your selling candles. There's your order block. That's your confluence. Within the hot zone, you've got a rejection right here. That's your signal. You enter. Here's TP1. Worked its way down. TP2 and TP3. Okay? I'm telling you guys, it's golden. It's golden. And there's a couple days in here that I took some losses because I either was distracted at work or I was getting like directional blindness, expecting only one direction. So when you're looking for this, always tell yourself, is there a setup in the long direction? Is there a setup in the short direction? Don't only look for one, because it'll kick you in the ass like it did me. And just stay consistent, man. You can see that it works. All right, here's the next one. 9:30, market open. This one was a little funky because you didn't really have any good structure here for this one to drop down. But what it did is it created structure. You came up and then you came down again. It broke this structure all the way over here, right? So right back at it again. Running our fib. Here's the high. Down to the low. Bring it all the way to hell over here. You would have been just stretching this thing out all day. You know what I mean? This was around lunchtime. But again, this one is a little harder to identify your gaps. But I believe on this day, I bumped it up to, it was either got somebody trying to come in. Welcome. We're only about 9 or 10 minutes left, but I'll be showing this in the groups. So if you can just mute your mic, I'll finish up with these instructions. All right. So again, we've got our fib drawn from the high to the low. We're waiting for price to come back up into the hot zone. Now, what I was saying is that on this day, I believe I bumped it up to a 5 or a 15-minute time frame, and within there was a gap. I want to say it was like right up in here. One of these was the fair value gap. So we were good on that point. So again, even if you're just running it simply off the fibs, it came into the hot zone, rejected that area, made its way down. Here's TP1, TP2, and TP3. All right, boom. On to the next day. We've got a couple of minutes left here. Here's Friday. Move over. 9:30 open. Stretch this out so you guys can see it. So here we are at the open, right? We're waiting for the break of structure. Here's our low. Price jumped around, broke structure to the downside, created our fair value gap here to here. you have an order block here. Last up candle before the big down candles. OB. Okay, and then lastly, you put in your Fibonacci from the high to the low. Let me stretch it over. I gotta take off that magnet. Take this off. It's sticking too much. All right. So high to low. We're waiting for price to come back up into our hot zone. You got a beautiful rejection right there. Your TP1 is obviously here. Then you got a TP2, TP3, and TP4. This was a banger on Friday. All right. So that is the gist of this thing. I'm going to put up my Fibonacci settings for the sake of the video, so that everybody can pause this and be able to put those settings on your Fibonacci. Of course, this is TradingView. All right, and I'm going to try to give you guys one other example as quick as I can, and that is my news strategy. So let me try to hurry up and go back to. So this is, I went and grabbed the history of the NFP news, the days that it was going off. So we're going to jump back to, the last one was June 7. So let's get back to the chart. Go to the 7th. Oh, forgot. I got to change it to the 5-minute. It doesn't give me data back that far. So the 7th, boom. Okay, so let's see. Okay, here's the news. So I marked it out before we got started, right? So with the news strategy, what you want to do is don't jump in when the news, first hits. That's the danger zone. No trade zone. Let it jump around. You can see this thing spiked up, tricked everybody, and then slammed down, right? Let it do all of this. When you get down to your lower end, like on the 1-minute chart, you're going to see in here a doji candle. So you'll see something, like this one here. That's your sign. Look for that doji on the news and then trade in the opposite direction. What you do is you run your fib from the high of that opening candle, the news candle itself, the high down to wherever the low is, and maybe a couple minutes later. And then you're going to put your position up to the 50%. This works. It's got to be like 90, maybe even 90% of the time. Okay. That's that one there. What was the other date? 5/3. 5/3. Back. Here's news again. Got your giant candle. Blast it off until it finally got weak. There would have been a doji somewhere in here on the 1-minute. Place your sell. Take it to the 50%. Same thing every time. Okay guys, so there it is. I hope you got some good sauce out of that. Hope you took some good notes. Go ahead and put that into your back testing over the weekend, during the week, however you do your back testing. And I hope that it makes you some money. You guys go ahead and have a successful and prosperous trading day, trading week, and trading future. I'll see you on the next one. Peace.